Dear friends, it's a great pleasure to be able to communicate with you and update you on our Flexicap Dynamic and Focus 25 funds. Uh, the last 1 month, we potentially saw the peak of phase two of COVID, and now we are seeing a gradual normalization of the economy taking place. As we look ahead, the systematic risk continues to seem high with potential talk of a phase three of COVID. Also, the pace of economic recovery seems to be slow because the impact of phase two has been much more significant versus the phase one of COVID, where even in this time in the phase two, even the rural economy seems to have been majorly impacted. However, when we look ahead, I think there are some positive cues as well. There are several studies which suggest that given the current pace of vaccination that we are seeing, sometime in November, we could be reaching a stage post which a swift economic recovery could be expected, and a normalization trend could be something we could look ahead for. In terms of how we are positioning our fund in this scenario, is we are trying to have a right balance between being both conservative, so that we can take the current systematic risk into account, and at the same time be sure that we have the capital protection, which is our key motto, is something we are constantly looking at, and at the same time being aggressive enough to position the fund in a manner where as and when the economic recovery starts to gain traction over the next few quarters, over the next 2 3 years, the fund should be in a position to kind of benefit from the same. So with regard to that, what we have been of late been doing is increasing our economic proxies and economic related plays in our portfolio. Uh, with regard to that, what we have seen in the last 1 month is that both for the FlexiCap as well as the Dynamic Fund, we saw two new additions, which is Bajaj Auto as well as State Bank of India. Whereas in case of Focus 25, we significantly increased our exposure in Bajaj Auto. So when you look at both these companies, we think they represent, a example of how both the requirements of being conservative as well as aggressively positioned for the economic recovery is something which is present in both these companies. For example, when you look at Bajaj Auto, even at current price, it has a dividend yield of roughly around 3 to 3.5%, and 50% of its business comes from exports, which in a way insulates you from the vagaries of the domestic market. And even the export business is growing strongly, and we think that as and when the economic recovery starts taking place on the domestic side for the two-wheeler and three-wheeler industries, both these industries are at decadal lows, and hence we are looking at a strong growth ahead even for the domestic side. Same for State Bank. We think valuations here continue to remain very attractive, given the high value we see coming from their subsidiaries itself. I think, moreover, another thing in case of State Bank is that we feel that the kind of impact their platform could have across their business verticals could be very significant, and this is something as we move ahead, maybe the market would appreciate more and more. So with this, I would want to conclude our update on all these three funds, and look forward to again having our interaction. Thank you so much.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.